saying is, with me sitting next to you, and I'm going to filter it and explain it to you, you'll be able to have that advantage that I'm not making available to everybody else, because I'm not obligated to all of you. But I feel obligated to him because he's my son, he's my offspring, and I want him to be equipped, to be just like and better than me. So he's had that first experience of undoing himself. He feels the shame, he feels the remorse, the regrets, and I want him to understand that that's normal. So you're going to have times when you're just going to do it. You're going to do that. You're going to feel confident about yourself. You're going to be overconfident. You're going to have a losing trade. Or you'll have that experience where you made money. It felt great. You want to do it again because you feel like it's going to move even more. And then you try to go back in again, and it's not doing what you want to do. And then now you got to go into fixing it. You're starting to put fires out that you started yourself. But you don't realize it's not water that you're pouring on the fire. You're pouring gasoline on it. And it accelerates. And that wildfire spreads and it eats into not only the gain you were unsatisfied with, but now it starts eating into equity that you worked hard for to build up. And then entering the drawdown. And that threshold, it's okay to lose what you need on the trading desk. It's easy to tolerate. It's just frustration. Yeah, it sucks a little bit. But then when you eat up what you worked for a week or a month or so, that really hurts. That's like a kick in the joint. You don't really like that. It sucks. And especially if you go into a weekend. As a trader, that really, really stings. And it takes the pleasure out of everything. Food don't taste as well. Friends, company, it irritates the shit out of you. Everything is heightened. And it feels like thorns. No comfort. No rest. And you punish yourself. He's feeling that. But when you get into drawdown, where you go beyond where you started, and you get it to yourself, and you just recklessly plunge, and you're trying to get it back quickly, and you just keep doing more damage, I think that's actually a good thing that the fund account companies have that threshold where they stop you. It's a continuum. That's it. You've done enough. And it makes you have to take a step back and reevaluate what you're doing. Now, he doesn't know why it didn't work. He just thought he saw the things that he was looking for. What did he have wrong? Apart from going back in when he had a really respectable return, $831. That's a nice little return. It's actually above the range of target that I had set forth for him, saying, look, this is all you're trying to do. You're trying to do this, nothing else. You're not trying to get rich. You're not trying to blow it up. You're not trying to pass the compound in a week. You're not trying to pass it in 5 days. Okay? We set the pace for 2 weeks. 2 weeks, that means next Friday, his target should have been reaching the, I guess it would be part 2 or phase 2 of it. And he was well on track with that. Now, I got to go in and help him get back to that square one. And you might say, oh, well, you shouldn't do that. No, it's my son. Don't tell me what the fuck to do, okay? But I'm sharing something with you that I'm not obligated to share. But I want you to understand, just because he's my son, there isn't some kind of carryover because he has my DNA. He has every character flaw that a male has. Pride, arrogance, impatience. He wants to flex. That's in him. He's rushing to be able to flex. And now he's wrestling with that. He's like, I blew it, and now I feel bad because we worked several days, and then now I got to go back and do that all over again. More specifically, I got to hear you tell me that it was my fault, and I already keep telling myself inside my head it's my fault. Well, that's all part of it. You have to feel that pain. It has to be a consequence, formidable consequence, something that is, it's going to shake you up and make you feel like you don't ever want to risk doing.
It's not just to familiarize yourself with the platform or a broker. It's absolutely to teach you how to trade. And anyone that says otherwise is just a fool. That's a lot. But we're looking at a market that has a little bit of a mixed bag this morning, much like we had yesterday. I was calling most of everything you saw yesterday in ES on my Twitter feed, so you can go back and take a look at that. But today we have the dollar index. It's come off of its lows from 9:30 back into the range that was formed from 9:15 to 9:30. I'd like to see it mount a run above. Go back and check the charts. I don't want to talk too much and make a mistake of losing audio. The high 103.13. I want to see it trade above that. That would indicate there's likeliness to see the shaded area on ES be revisited. And again, we're just looking for an opportunity to frame the 5-handle run, which is not a lot. And right away, you should be thinking, how much could I be risking with that? Well, when you first encounter doing entry drills, where you're practicing with your demo account or your paper trading account, which is how you do this, you're using one contract. Now, I know some of you out there that are trying to make a name for yourself, trolling and making up a bunch of nonsense. You're going to be out there and you're going to say, well, I trade 40 contracts or 30 contracts and blow my account out in front of everybody in live streams and pretend it doesn't happen. What we're doing is trying to teach you how to overcome the fear. That fear, that anxiety is rooted in, number one, the leverage. Right away, the easiest thing to do to remove fear or to squash it, any anxiety, is to remove the leverage. Dial that back. Just because your funded account says you can trade with 15 contracts, that's not an invitation for you as my student to think that that's appropriate. That's a lot of risk for someone that's just now getting a funded account. That means you're new. You don't have the experience. You have no idea what it feels like to watch an account balance fluctuate with that measure of capital on each point fluctuation. So you want to start with one contract, and you want to desensitize yourself, because that same 5-tick handle, or sorry, that 5-point run in ES, you can do the math, and over time, when you can graduate to 2 contracts, 3 contracts, 4 contracts, or even up into that 15 contracts per trade, you'll have the experience working with price action that's associated with real monetary loss and potential gain. You just can't simply go out there and say, well, I'm ready for it now. I'm going to go out there and just plunge into whatever the amount of contracts they allow me. I'm going to do that. When I was teaching predominantly the Forex markets, I mentioned it many times, just because you can leverage as much as you can leverage with the broker. You should not be doing that, because all you're doing is increasing the likelihood that you're going to blow, you're going to lose, and you're going to be fearful the entire time you're in the marketplace. So you want this to be very boring. You don't have any kind of emotion attached to it, any kind of excitement, no kind of fanfare. Because if you remove all that, your attention is going to be on price action, not how much you can make, or worrying about how much you're going to lose. And that's unfortunately the case with most new traders, is that they want to gamble much like the lottery, and how much they can put on the bet and just hope it works out in their favor, not realizing that if they just did very little risk, they can take lots of trades and still stay in the game long enough to get the eventual outcome that they're looking for. If it's not get rich overnight real quick, because that's not what you should be doing. So far we're just marking time on ES. Hasn't done too much of anything. I'm looking at the NASDAQ. It's not doing much at all either, but the Dow is certainly weaker. It's coming off of its run higher that it's posted this morning, early on. I'm watching, there's a volume imbalance at 103.06 on the 1 minute chart of the dollar. So my eyes there, I want to see it kind of respect that. Still pressing to 103.13. That rallying higher in dollar would be risk off near term, meaning that it's easier for foreign currencies like British pound versus US dollar, Dow, NASDAQ, ES to trade softer, go lower. It doesn't mean I'm picking the top. It's not an indication that it's going to crash. All I'm saying is it puts things in motion that would be likely supportive of weaker, lower prices. We already gapped higher. It's already had that initial move high. There's this consolidation. It broke out. Traders that use this type of idea to buy, want to break out, they're already in this here. I'm going to drop down into a 1 minute chart now. Actually, let's just go through 4. 3, 2, 1. Okay. So the exercise I'm teaching you today, when we get into a setting where there's opportunity there, but there's nothing there yet. Remember, the first 30 minutes as a trader trading with ES, you want to be willing to submit to the first 30 minutes. It doesn't mean that you can't find a setup. If it's there, if it's obvious, then obviously, then you can. But as a rule of thumb, general rule of thumb, you want to submit to those first 30 minutes. Because sometimes there's reports that come out at 9:45, not today, not every day, but sometimes that occurs. Also, the initial move, right off the opening, generally is not the right one to be placing yourself in front of risk. So meaning, it could be a Judas swing, a fake move. Okay, so we want to allow the marketplace to draw in the gamblers that want to trade in near the first couple minutes of trading. Okay, and you want to just relax, slow down, and remind yourself that you have plenty of time. Plenty of time. You have the entire day to find these measly little 5 handles, and you don't want to rush just simply to get it out of the way, because that's also another thing that you're going to feel like you want to trade. You're also initially anxious about doing it incorrectly. So one of the things you're going to feel is, all right, I'm in front of the charts. I have my account. It's funded or it's real, and I got to just get in here and get it out of the way. So that way I can make my money and close the charts and just be away from it. What you're doing is you're conditioning yourself to hate trading. I went through a phase like that. After a few accounts that I'd blown in the 90s, that feeling of I just want to get in there and get my money and run away. I was conditioning myself to be afraid of it, which is what made it almost impossible for me to grind through to a point of not being fearful. That's why I have so many execution models that lets me get into a trade. I have lots of opportunities to get into a trade that allows me to participate in a move. And the reason why I have so many weapons like that is because that was one of my strongest barriers. I was afraid to enter because I didn't trust the model that I was working with was a good one. I didn't have enough experience seeing it work. I was in a hurry just because I saw a few of them work, and sometimes they didn't work, but I blocked that part out. And that's another thing you need to be aware of. When you do these exercises and these drills, don't block out the times you do it wrong. Don't do that. You want to make sure that you learn what you did incorrectly in those, and don't try to put blinders on thinking, okay, well, that didn't happen. No, you need to know what you're doing, because if you don't address the issues that you're doing incorrectly, they're going to repeat. And if you're doing it live funds, you know what's going to happen. Eventually, it's going to wear down that equity or wear down your mental capital, and between both of them, you will blow your account. So preservation of capital is the first and foremost important rule in speculation, whether you're doing it with paper trading, demo, or eventually in live funds. So right away, again, we're submitting that first 30 minutes. Nothing's happened so far today. Dollar's firming up. It still hasn't gotten above that 103.13 level. want to see it get above that on dollar 103.13. That's the level I referred to earlier. There's some weakness we're looking for. That right there. Okay, now, right away, your eye should jump to these clean lows right there. You see that? See that right there? Now, what's resting below those lows? Sell side liquidity. This low here, we had a displacement below it. We're trading back up into the imbalance here. So the risk would have to be, where we at? Wrong one on the chart. 40, 20, swing high. 4025.75. Okay, so do we offer an opportunity to see 5 candles in this area here to that level here? Yes. That's not bright enough. On left. Okay, so now what I'm doing is, as I'm watching the ES here, I want to see it drop below just to trade back inside the shaded area and also gravitate towards the sell side liquidity. And I'm watching the dollar index. There's a small little imbalance that's trading on, let me tell you the candle right now. If you look at the 1 minute chart, it is the 944 big green candle on the 1 minute chart. I'm watching, does it respect that? In other words, does it want to send dollar higher while I'm watching ES? Drill is 5 for 5. That means you're going to risk 5 handles to make 5 handles. I already know there's going to be individuals in here thinking, oh, that doesn't make money. It makes money, but you don't need a high rate of multiples for, you don't need a 5 to 1, a 10 to 1, 21R multiple to be profitable. If you have a strike rate that's pretty high, you can do 1 for 1. But while you're training yourself, you don't need that. You can just do 1 for 1 because you're conditioning yourself to get over that fear of missing or not missing the trading because you're afraid you're going to miss a move or you're going to take a loss. I'm still watching that dollar. This in here is not as clean as I would have liked to have seen it. I would have rather had not seen that little move here, but I'm giving it an opportunity to see if I can see that run up on dollar on that small little buy side bounce, sell side efficiency. And again, we're still in that first 30 minutes of trading, so this is all part of that. What are you looking for at ICT? What are you waiting for? What do you look to see? What do you want to find in price action? What is your focus? What don't you like? That's what I'm doing right here. This is how you mentor someone. It's just not blindly going in there and just taking a trade. Now let's just say, for instance, let's play devil's advocate for a minute. Say it starts to break lower. Okay, say it breaks lower and I haven't gotten in yet. I can use the top of that shaded area and the midpoint of this wick here, which will be consequent encroachment. In other words, if it traded down here but didn't trade below here yet and trade back up into it, I don't have a problem with that taking it as an entry. Now, you might not be comfortable with something like that. I'm not trying to convince you that that's the model for you. All I'm saying is how do you overcome fear of entry? That's the whole topic today. But I'm wanting to trade with an entry with a fair value gap. That's what I'm trying to force my focus on. That way, at some point, it's going to give it to me. I just have to wait long enough for it to happen. It's going to happen every day. There's one. But you don't have the patience if you're new to wait for it. And since we have nothing in here, did I go short? No. Why? Because there's no fair value gap. I wanted to see a small little portion of that down closed candle left open. Then a new candle start, and then it trade up into that. Then I would have sold short right there, targeting these lows. But if I don't have what I'm looking for in the charts, I'm not just going to think, well, I got video games to play. I got to do something here. Or my wife's going to be asking me to do something, and I won't be able to be in front of my charts. Not that she does that, but you know how it is in the real world. You get pulled away from doing this, and they're wonderful little distractions. So dollar index did not respect that fair value gap, which is what I was watching for. It went a little bit deeper than I wanted to see, but it does have a wick. If you look at the wick on the candle 1 minute chart for DXY, the 943 low, that wick on the low end of the candle, we just dropped down into that. So I'm trying to watch and see if we get some kind of respect there and go higher. But I don't like where we are with ES, so we might need to go one more time higher on ES. NASDAQ looks like it wants to flirt with a higher high also. So, but the Dow is just a dull right now. Let me pull up Dow real quick since there's really nothing here at the time for ES. My focus is primarily on that market. So that's the difference between the Dow on the 1 minute chart. Lower, sloppier. And then on NASDAQ, we have that. So we have relative equal highs. It looks like we could run up in there and hit that. ES, we have this. So we have relative equal highs here. Small little gap here. So if we trade down there to that, to 23 to 28, that would be 5 handles. Dollar's just hanging around still, not confirming or denying anything. This is the part, this is the time that is excruciating for inexperienced traders. You feel like, okay, you showed up. You're here. ICT says he's going to push the button today. And you're ready. You're chomping at the bit. You can't wait. And that's exactly how it feels when you get in front of a chart, when you have live funds at your disposal. You want to do something, but then you're also, I'm scared. What if I do it wrong? Everything's a second guess. And you're in a hurry. You're just in a hurry to get in it, just to do something. And that's the trap. You have to still remember what you learned about trading in a demo. You have to remember those lessons. You have to go back on that experience, because if you don't refer to that or even have gained any of that experience, you're going to be impulsively just pressing the button. And there has to be something in the chart to do a entry on. You just can't just, well, you just gamble and see what happens. We're saying that it can go up to that 40.28 level. I'm not interested in taking that. But that's a move, I see. It is a move. But I want to use a fair value gap today. That's my focus. I'm confident it'll form. I'm just trying to exercise discipline to show you what it's like to sit through all the other price action moves. I don't care who's making money on YouTube. I don't care how many people's posting things on Twitter. That's not my trade. That's not your trade. You can't go back in time and enter when they did, if it was even profitable at all. So you have to submit yourself to this process of learning to pop up through here and hit that 40.28 level. Still very, very mixed, which is typical ahead of FOMC. So you have to be a lot more nimble on days like this, and also by lowering your expectations. So now think about what's actually occurring here. The market's gapped up at the open. We have a small little rally higher, and we've dropped, but we haven't dropped aggressively. There was no real energetic drop. See that? The only thing we had here was this drop down here, and it quickly, with the relationships of intermarket analysis with the dollar, it canceled out any short here. And if you missed it, it'll be in the recording. Go back and listen to it. There's a pop to 40.28. So in my mind, I'm thinking anyone that's already trying to sell short the gap higher in the initial high that's been formed here, this run here kills them. So now I'm watching very closely how that dollar index, go back to that original fair value gap. That means the one at the candle at 944, 1 minute dollar index. If we rally here, because we cut through candles, we're not supply and demand. Cut through the candles that's been formed over the last 7 or 8 of them. Go back to that fair value gap. The candle ring right now basically is already traded down into that low of that fair value gap. And I want to see, does it rally higher on dollar? And if that does, this high here on ES could be suspect, meaning that it's just a run on buy stops or anyone short, and then we could look to see it trade into that 420 or lower. But it has to do so in price. All we're doing is anticipating the likelihood of that right now. Yeah, I'm back. And you're like, what are you looking at Eurodollar for? I'm looking at Euro. I'm looking at the pound dollar. I'm looking at the dollar index. I'm looking at the relationships of that triad and trying to get a measure for where risk is. Is it risk on or risk off? And Euro is just consolidating. It hasn't really done much at all since around 7:30. It's been consolidation. Dollar, like I said, it came off its lows at 103, and I'm still looking for that 103.13 to be broken to the upside. And how we trade there. It hasn't gone below on dollar index. It hasn't gone lower than the low formed at 954. 954 is low. And now we have ES coming back down below these highs here. Okay, dollar's looking favorable now. So now what we're going to do is we're going to wait to see if this high stays in place. If we break lower and create a fair value gap in here, between where? Between this low and the high that's formed. We're using that price leg there. So inside of this range, this is protraction. It's done what? It's taken buy side here with this rally up. So inside of this price leg, we're anticipating now a fair value gap to form. And if it can form, I'll use that one, excuse me, I'll use that one to try to get a run for 5 handles. Now I don't want it to go too fast from here. Brett's like, ICT's trying to trade it, don't give it to him. Reprice it lower, no fair value gap. He's going to convince everybody today. You can't do it all day, and I'll stay here long enough to do it. Okay, so you can see already, like if we were using turtle soup would be that run above, and just going in there and, and shorting it because we had a divergence between the Dow and NASDAQ and ES making higher highs. Dow didn't do that. All right, so I want to see this candle here create the fair value gap right there. I don't want to see it go up and have an immediate rebound, so I just want to see it close this candle, open another one, then trade up into it, but not take out that low yet. I don't want to see that happen yet. And it looks like it's trying to run. Dollar indexes nicely ran up into the level I want to see. Beautiful, beautiful. And we do have a fair value gap here. So you can do one of two things here. In your practice, you can set a limit order here at this high plus one tick, and then use a stop of 5 handles, and then use a take profit of 5 handles. Or you can wait for it and trade up there. And that's, like I said, I'm running the risk of not participating on this one because it's already running and not giving a return back to it, which is fine. But you didn't get in ICT. I know. There's lots of moves that I don't participate in, just like you're going to discover. Now we have a breaker. Okay, so while I don't want to utilize this as my entry, I do want to bring it to your attention because it's here now. The breaker is where we have a high, a low, and a higher high, where it has taken buy side as I outlined in real time. This buy side that's been taken, our attention goes to the down move prior to the second higher high. So in other words, in short, the low between the two highs. So where's the down close in that low here? These candles entirely, all that range. 1, 2, 3. 1, 2, 3. So inside this range, that is a bearish breaker. So let's just say it goes up into this fair value gap here. You can short it, but you have to incorporate this because you can trade up into that as well, because it's a fair value gap within the breaker. So ideally, I'd really want it to trade up into here, but it may be asking too much of it. So I'm going to do a lower probability entry. If we can go right above this high here, I want to see it one more time, pump into that once more. I'll go short, risk 5 handles, and see if we can get 5 handle run. The liquidity is obviously sitting right below 4014.25. So 401425, all this smooth lows here, their sell stops resting below that. So if smart money has sold short up here, collecting what? The buy stops. So they sold to those buy stops with this run here. So where are they going to try to get out at? Ideally, market efficiency paradigm is they're going to buy from sellers at a lower price. Market's here. Where are sellers at a lower price? Below these equal lows. I can enter here, but my 5 handles doesn't provide me enough shield where we are in that range with this fair value gap, which is also one of the things you have to contend with when you're trying to take entries. Just because you feel confidently it's going to go to a specific level, you still have to consider the risk. And just because you might be right about where it's going, you can't chase it. You got to trade in a premium if you're going short. That means trading in a up close candle. It's one of the filters that many times is going to serve you better than you realize now. If you can sell short and up close candles and buy and down close candles, you're giving yourself an advantage that most traders don't realize when they're trying to do entries. hate doing this one, admittedly. So I'm watching, waiting for. Now, I just pressed that button. It took forever to get it in there. Okay, now you just submit to it. If it takes you out, that's fine. If it stops you out, it's fine. And you want to submit to the idea that how much time does it take once you enter the trade? How much time does it take for you to see it move in your favor? Or if it stops you out, how fast did it take you to stop out? Now, obviously, I'm using a fair value gap entry, but I'm using the context of that breaker. So it kind of like allows for more of the things I like to look for in price action, but framing it is being utilized with other tools. But hopefully you can at least see that the reason why I'm entering is in that fair value gap right here. Okay. Now there's a small little volume imbalance in here. I want to see it trade through that and not get back above it once it does go below it. Now you reduce the risk, put it right above the breaker. That way if I'm stopped out, it's a small little loss. Now all you're doing is studying price action, watching, does it still continuously deliver, wanting to get down into, I have it set to this lower here. But if I had more, let's go back to this idea where the sell side is okay. But when you're practicing, you want to have a 5 for 5. 5 risk, 5 gain. I want to see it right here, stay heavy and go lower. That would be an immediate rebalance. In other words, kind of like a fair value gap, return and then drops. I want to see ES remain heavy. I want to see the dollar climb back up into 103.16 area. And also, you want to indicate in your journal that you're trading ahead of FOMC. So you are in a market climate that is not conducive for high precision. It's not conducive for low resistance liquidity run. It means the easy salad days type trading. That's not where we're at. But you want to practice in these conditions, because by practicing in these conditions, you're preparing yourself really for the best when the market's more free to move. In other words, when it's easier to see it rally or drop into the levels that you expected, when it's just real sudden movement, all one favor, just digging into it. That's the type of trades I teach my students to look for. I look for that as a signature in the marketplace versus just simply, well, the markets are moving today, the markets are trading, so therefore let me just go out here and try to make money. That to me is not enough. My eyes watching how we trade at that low. I want to see it trade to that low and expand quickly to get these sell stops. That's what I'm looking for. Just a little bit of a movement up $1 so far. I want to see it really get aggressive and dig into that 103.16 and higher. Now you want to remove the risk because you've gone into a new sell side. If it stops you out at this point, who cares? But because we went to this low here, the market can go back and revisit premium arrays and still not go to that sell side, which is the reason why I removed the risk. And now you just submit to either one. Either it stops you, which you're fine with, it'll be stopped in profit, and it would be a favorable outcome for the exercise, or it goes to your limit order and it closes your case study out and you log it and you record immediately. You don't go to social media and parade around, or if you get stopped out, you don't go to social media and complain about it. You go right to your journal. You journal your entry, suggesting what? All the things positively that you did in the trade, the observations. Now you saw it trade down there, but it didn't take the limit order, and it was way significantly enough below it. They could have done it. There you go. So there you go. ICT's never going to do a live trade. He's never going to call the market. He's never going to explain it, but yeah, here I am doing it. How about that? It's almost like it's pre-recorded hindsight. Is that precise enough for you? So what you want to do is you want to go through how much time did it take for that trade to deliver. Obviously, I did a little bit more than 5 handles. But I have to work with what the market's going to give me, right, folks? So right away, you should be thinking, and your corners of your mouth should be aching because you watched all this happen and you can't believe it, I know. But this stuff happens every single day. It's been happening for the last 30 years for me. It's been happening before I was born. Okay, these markets are absolutely rigged. Okay, they're absolutely rigged. There's no randomness to it. The only thing that is going to be random is your emotional impulses when you're not equipped to know how to trade. If you don't know what you're looking for, you're going to lose. If you know a model, you know what you're looking for, then you can aim for that and you can measure your progress. But you're not, okay, you're not going to hit the target unless you have a target. What's the target? Consistency. You're looking for something that repeats over and over again. It's highly precise. I want you to take a step back from it, okay? And folks, understand this is not bragging because 10 handles is 10 handles. It's not that big of a deal, okay? But you can make a mountain of a career doing that. But I want you to take a look at what this chart looks like right here, right now. And I want you to go back and listen to the recording. There was absolutely zero anxiety. There was zero emotion. I was not hopped up on goofballs. I wasn't worrying about the trade panning out. I gave you exactly what I was thinking because of 30 years experience doing it. I'm lending my experience and what I'm thinking while I'm watching price. I told you the very things I was looking at, why I was considering it. I told you about the breaker. I told you how to frame the breaker, where it should stop. Did it stop at the high of the breaker? To the tick, baby. To the tick. This up close candle, this up close candle, and that up close candle. That's all my breaker. Look at this price right here, okay? Up here in the upper left-hand corner, you see that right there? That high is 4025.75. The high of this candle comes in at 4026 even, so it went one tick, which is a mohawk. Remember, price has to go up one tick to allow delivery of perfect old high. Think about if you had a limit order. It has to move. The difference between the bid and ask is one tick. So it has to do what? It has to at least go up there to offer the opportunity for that high to be booked. But that framework, think about the questions that many of you have asked, and you probably are listening and now had the answer given to you. How do you know ICT? How do you know that when it was rallying like that, how do you know that it won't go above that high there? Think about what I went through this morning with you, okay? I opened up the chart. I showed you this shaded area down here. Okay, we'll go back into that regular trading hours there. So the difference between yesterday's closing price and regular trading session to where we opened today at 9:30, that separation, that distinction between those two price points is important. That's the opening range gap. So if we open to a premium, it opens like it does here. It rallies, comes back down, rallies once more. Perfect. Perfect. We're watching now to see that fail. Go back and listen to my commentary. I'm not concerned it's going to keep rallying higher because it's already done enough of that overnight. This is a trap. This down here allows them to do what? Chase it. Longs can say, okay, I missed the initial run up here. Bears go short here. They put their stop loss right above this high. The market drops down into the opening range gap high and then rallies. Go back and listen to my commentary. I did not take the short that I was interested in if it would have kept that candle with the fair value gap. I would have shorted that then. But because I was using the dollar index to filter, it kept me from doing what? Getting in prematurely. Plus, the structure really wasn't all that. It was just not, it was not there yet. So I mentioned that how looking at the other markets, I said, okay, it looks like NASDAQ is looking like it wants to make a higher high. Let's take a look at NASDAQ real quick. I hope you guys can see this is not just random made up stuff. There's a logic behind all this. So there's those relative equal highs. I said we would like to run up above that. It did that. Look at the Dow. See that divergence there? That's why I was trusting that we were not going to go higher, and that was absolutely a good breaker on ES. So let's go back to ES. I'm answering all your questions. If you just listen to the boring stuff, folks, it's there. There's a lot of people I started watching this video and say he's talking too much and missed the entire move. But this down closed candle, this series of 3 down closed candles, is the context behind that run up here that stops out anyone that was going short here because they want to do what? They want to fade the gap, right? Okay. The algorithm knows that. It's going to come down, rally through it. All the buy stops are going. Why is that useful? Just like I mentioned to you, smart money will sell short to those buy stops. They're going to sell to those buyers at a higher price. Smart money is accumulating. Oh my goodness. We're getting sleepless in Allen, Texas tonight. So we're looking at this area here. Up in that area, all here, that's where smart money is going short. Okay, so they're selling short there with the expectation that they want to do what? Buy it back at a cheaper price. But who would be willing to sell it to them at a cheaper price? Think about it. Who would be willing to do that? Anyone that's long here or went long on here, it's the idea that this is support price. That they want to do what? Buy it back short. Okay, so they're selling short there with the expectation that they want to do what? Buy it back at a cheaper price. But who would be willing to sell it to them at a cheaper price? Think about it. Who would be willing to do that? Anyone that's long here or went long on here, it's the idea that this is support, where they're going to place their stop loss, where they just got wrecked. So when smart money is considering entering a short, the market efficiency paradigm that I'm teaching you, the way they engage price, they're not looking at patterns. They're looking at who they can take to the slaughterhouse. They killed the people that were short. When it ran above it, they're done. They're stopped out with a loss. Anyone that was short here gets stopped out. Anyone that went long down here, oh, it's gap and go day. No, it's not. Listen to what ICT said. We're going to rally up, take a new high, and then we're going to watch and see does it peter out, and it did. The market goes back down and takes out the longs. So who's really right? Who I told you was going to be right? The smart money selling here, and they're going to be buying down here. So when I'm looking at price, I'm looking at this to that. Shorting, buying it back. But because I told you I was going to limit myself just to using a fair value gap as my entry, I had lots of tools. I could have very easily sold short up here, broke my rules just for ego purposes, and then wrote it down here. That would not have been what I went into this teaching for. I want to teach you how to do what? Look for your model. So if your model is the 2022 model, you just watch me do it. You literally just watch me do it. The context is selling at a premium If you can't get that price and you're submitting yourself to what, like I taught in the 2022 model, wait for this placement. This is the shift in market structure, right below that low. Then we have two fair value gaps. You can sell short in here, but you got to incorporate this fair value gap too. Why? Because it's inside the breaker, which is what I outlined here. And the market does what? It rallies up. I am not concerned about it making a higher high because we already have at that high versus this high. The Dow has made a lower high. That's SMT. That's tipping its hand. The algorithm is showing its crack and correlation. It's telling you, much like I was telling you, that this rally is a suspect rally, meaning it's only going up to take the stops out for anyone that's short. Don't believe me? Go back and listen to the recording. It'll be there. But I'm not concerned about it going above that high because I know that the algorithm is going to refer back to that candle's high because the context that books price in this algorithm repeats. It's not random. It's not this high. The Dow has made a lower high. That's SMT. That's tipping its hand. The algorithm is showing its crack and correlation. It's telling you, much like I was telling you, that this rally is a suspect rally, meaning it's only going up to take the stops out for anyone that's short. Don't believe me? Go back and listen to the recording. It'll be there. But I'm not concerned about it going above that high because I know that the algorithm is going to refer back to that candle's high because the context that books price in this algorithm repeats. It's not random. It's not milling through a whole different range of ideas and retail things. It's not looking for what retail logic is it going to use today. It's going where orders would be resting. It's going where inefficiencies are. That's the only thing it does, folks. That's it. Or it does this, sideways. It's going up for buy side, or it's going up to go into a premium fair value gap, some kind of inefficiency. Or it's dropping to old lows where there's sell side. Or it's dropping down to some discount inefficiency. Now, look at it through the lens of the 2022 model for a second. We see a high. The market rallies up. Did I use any other time frame? No. I traded right off of this time frame here, using the tools that I've already taught you in 2022. So if this market's going up and you're new and you're afraid, I'm afraid to trade ICT. How do I get over the fear of that? Follow the rules. The rules say wait for it to go lower. Where? It's got to go below short-term swing low. It does so here. Trades below it. Go through. Does it have a fair value gap? Remember the range I told you from here to here? Let's go back up through that. In that range, all of this is protraction. So in that range, when it starts to drop back down, we're going to be anticipating what forming? A fair value gap. There was two of them, here and here. The rules I gave you in the 2022 model last year was if you have two fair value gaps, you have to at least allow for price to trade up into that second one, because it can. But more specifically, because we have that breaker there. Because the breaker is a factor here, we have to at least make an allowance for, I'm the wrong candle, sorry. You have to make an allowance for it trading up to the high of that. So I'm not concerned if it goes to that candle's high in one tick or two. I'm not concerned about that. I'm not freaking out that it's going to go above that high. Because if it did that, that's fine. That means I'm going to go bullish now. Because it would erase and cancel the S&P divergence between the Dow and its lower high when the NASDAQ and ES, like we show here, made higher highs. So it would be a stop out on one trade, but it would give me insight into being a net long trader the rest of the day. Because it should not have failed. See the difference between fearing being stopped out and allowing, if it does, then I'll change my bias. That's experience. That's someone that has been here before, and I'm not reacting to price. Did anything that I outlined this morning seem or indicate to you that I was reacting to anything? No. Allowing, if it does, then I'll change, because it should not have failed. See the difference between fearing being stopped out and the rest of the day. So it would be a stop out on one trade, but it would give me insight into being a net long trader the rest of the day. Because it should not have failed. See the difference between fearing being stopped out and allowing, if it does, then I'll change my bias. That's experience. That's someone that has been here before, and I'm not reacting to price. Did anything that I outlined this morning seem or indicate to you that I was reacting to anything? No. I literally outlined everything you see in your charts here. This is where the price was going to rotate to. It was going to make a higher high. The model for 2022, if you take the low, well, let's just do it. Here's the low up to the high right there. Here's the 50% level. That's equilibrium. So we have to find something as a discount below that level. Well, we have these lows, this low, and then these relative equal lows here. Which one's more likely to have the bigger pool of liquidity below it? Obviously this one here. And it's nicely below the 50% level. So we're in a discount, and we smashed all the way down into it. 10 handles. I like to over deliver. I told you I'd give you 5. I gave you 10. But you could very easily, if it was your exercise, once you got the 5 handles, collapse it, and then watch it the rest of the time. Using the logic that if you were still in it, how would you be feeling each time it creates a new candle lower or higher against you? This move right there, that's my classic teaching of the breaker. This is what you're all familiar with. But like I said, just because you watch those introductory lessons, those core content lessons, that's not mentorship. That's the language. My students have to know those things before they can really learn how to use the things. I'm not upset about those core content lessons being shared around. It was intended for it to happen. That's viral advertising. It was seeds in the minds of everybody that got their hands on it. And I don't feel bad about putting them on my YouTube channel. And my students that are mature, that are able to do these things now, they don't care that those videos are up there because they know that there was thousands of videos outside of those. That's where the real mentorship was. And they're not going to help you because they're old. Like you just watched this one here. You watched it pan and shared around. It was intended for those core content lessons. This is what you're all familiar with. But like I said, just because you watch those introductory lessons, those core content lessons, that's not mentorship. That's the language. My students have to know those things before they can really learn how to use the things. I'm not upset about those core content lessons being shared around. It was intended for it to happen. That's viral advertising. It was seeds in the minds of everybody that got their hands on it. And I don't feel bad about putting them on my YouTube channel. And my students that are mature, that are able to do these things now, they don't care that those videos are up there because they know that there was thousands of videos outside of those. That's where the real mentorship was. And they're not going to help you because they're old. Like you just watched this one here. You watched it pan out real time. Exactly how I teach. There was nothing contrived here, nothing random. And it should bolster your confidence that what you're learning and who you're learning from can do it precisely, accurately, with no emotion, no pomp, no ego, no bragging. It's just the facts. This stuff works. This is the market. It is the market, folks. It's not pattern stuff. It's not indicator stuff. All I drew on this chart was the logic to help you see it like I see it. Because the entities that I dub and refer to commonly as smart money, that's not the same people you think it is. It's not a market maker. Market making is algorithmic now. There's no person that's a market maker. You may hear them be referred to as a market maker, but they are a dealer. That's all they are. They're not making the market. They're not controlling price. They're not setting price to a specific level like this algorithm is. Now, my question to you is how on earth, if there isn't an algorithm, how can it be that I can see these things so precisely before the fact and explain it to you before it happens, and your real-time chart paints it just like I'm showing you mine is? Because there is an algorithm. And I'm sorry if that upsets your entire paradigm, if that conflicts with your teachings, your mentorships, your logic, your book sales. I'm sorry. I'm not meant to, upset you. I'm here to open your eyes to what's really going on. And I can do this every day. And damn it, I'm ready to do it in court. I can do it, baby. Let me do it, because I'm going to smoke your ass. Please. Pretty please. With sugar on top. Hope you found this one insightful today, folks. Until next time, be safe.
Doing that again because this is what you feel. This is what it's like. And all that work that you went through the first time, where it felt effortless, it felt fun, it's an experience that was enjoyable. Now you're in under where they start you at, because they gave you at 150. Now you're at 149, a little bit over 149. So now you have to get back to that starting point. And everything you do now, every trade, you're going to be concerned much more so about the outcome because you're in drawdown. And that creates toxic thinking. And you tend to do what? You tend to avoid following the rules. You basically abandon everything that you're supposed to be doing, which is the reason why people fail themselves and they blow their account. Because now you've increased the sensitivity to every transaction you make until you get back to your equity high. Like that's the magic thing. Like that's the magic number. You have to have that money back in your account, or you're going to be scared all the time. And in your mind, you're thinking, and everybody does this. Okay, this is what it felt like for me when I first blew my first account, or approaching, going back in through, correcting drawdown. Everybody that goes through drawdown, everyone, I don't give a fuck how long you've been trading, how much money you make. When you go through drawdown and you have an equity high and you draw down from that equity high, you feel like you're staring up at a mountain. And it may not even be that much money. And this is not a lot of money. I could literally do his entire funded account shit on Monday. I could get him at 159 rate. I can do $10,000 on Monday. I can do that. That's not what this is about. I'm teaching him, but now this lesson came a whole lot sooner and not in the way I wanted it to happen. I wanted him to do those things in front of me where I can control how much the drawdown was and then teach him right then and there. Okay, now this is what you're going to do to mitigate it. You're going to stop right here today, leave it alone, go home with the loss. And then we'll come back tomorrow, trade with half the size, and then build it back up. And then you'll be fine. You won't be afraid of it. So now he has that toxic feeling of impatience. I got to get it back. I'm sure he feels it even worse than you would because ICT's his dad. He knows I'm going to be in his ass about it. Not yet, because I don't want to add to what he's already feeling. But once we get it back up, I'm going to get into his ass. Okay, but he needs to be on good footing before I do that. I don't want to crush his spirit. Once he has the account back up, then I can chew into his ass and tell him, look, this is what you did wrong. This is how you've now impacted your perspective on price. You don't realize it yet, but you're going to remember this every single time you get into a trade and it starts drawing against you, even a little bit. It's just the beginning of that same thing I just did to myself in the beginning. 3 years from now, you're going to think that same thing. And there's two perspectives to have in mind. You can look at that and then cause it and allow it to cause paralysis and second guess yourself. Or you can say, yep, that's the reason why I'm using a stop loss. Yep, that's the reason why I'm not over leveraging. Yep, that's the reason why I'm going to take a loss in the session and stop and come back the next session. If I'm not all going to trade anymore today, I have to wait and come back to the next session. You place time between your transactions. Because if you're trading when you take a loss and you go right back in, unless you have a lot of experience, it's better for you to take a step away, put time between them, because you have chemicals coursing through your bloodstream that are really having an impact on how you see things. See, in your mind, you see that loss or that drawdown as an emergency, just like he felt on Friday morning. He felt that that was an emergency. He could lose that entire thing and have to reset it. I would not be ashamed of that because that's normal. He doesn't know what he's doing. Left to his own devices and his own intellect, he would absolutely 100%, 1,000% likelihood he's going to fail that if I'm not next to him. And that was the reason why I told him, I said, make these decisions when I'm next to you and let me filter them for you. Okay? You'll learn still by doing it, but let me at least be there to filter it. And Friday morning, he wanted to be, you know, 18 in life to go mentality. He's going to go out there and be a murderer and kill it. And bottom line is, he wasn't ready. And he found out by shock and awe that he was absolutely not ready. And if they didn't have that threshold of stopping him, he probably would have done more damage. Because listening to him, I didn't get any kind of indication that he had any brakes. So he was pushing and pushing until the brakes came off. He wasn't going to stop until he was done, one way or the other. And that's exactly how all of you, and that's exactly how I was as a 20-year-old when I was blowing accounts. That's exactly what it was like in my head. I'm going to push this bitch until the brakes come off. Nothing's stopping me. No one could have told me, stop what you're doing. You're being careless, reckless, you're gambling, you're trying to do something that's impossible to do right now. Your clarity is escaping you. You don't have it. You're literally just pushing the button, hoping something happens with no reason for having any reason to be in the trade. You just want to do something. You feel like you got to do something. Why? Why do you feel like that? Because you have adrenaline coursing through your body and you scared the shit out of yourself, and cortisol. Those two chemicals in your body is telling you what? The same thing your brain is telling you. Now you've made it a emergency. You're lying to yourself by saying, I should be panicking right now, when you shouldn't be. The opposite. As soon as you start feeling emotional about it, like you have to take the trade, you've got to get in there. That is the clearest indication to turn the fucking charts off. Leave your house, go for a drive with your phone not in your hand, and spend at least 30 minutes away. You got to let those chemicals and imbalances burn off because you're literally under the influence of high stress chemicals that our bodies produce to enable us to fight or run away. It's fight or flight. And you're sitting here in front of these charts telling yourself that there's an emergency that you've created and there's a fire that you got to put out. You know how you put it out? It's real easy. Close all positions, remove all orders, turn the charts off, get the fuck away from it. There it is. It's handled. No more emergency. That's it. You have a paper cut. Yes, your pride's hurt. Yes, you did damage to the account, but you have an account still. If you blow the account, yeah, you burned your house down. It sucks. But all of that still is not an emergency. You can refund, you can reset, you can add more money to an account, all that. But see, what happens is when you draw down from an equity high, especially when you're new, and then you fall from that height, and $3,400 is shit money. Like it's nothing. It's not even real money. It's the combine. But in his mind, he's thinking like that's a lot of money to him, and he wants to get funded. He wants to. And here's the reason why you want to rush too. They have senior week coming up in June, where all the kids here, they all go down to Eastern Shore and rent hotel rooms and all act like fools and carry on. And he wants to have a lot of money to just do whatever and be a baller in front of his girlfriend. And that was what was in his mind Friday morning. He wanted to be out there, throwing dollar bills around, like a madman, and looking, padded out. Because he knows I'm not going to throw money in like that because I know he's going down there to be foolish. So I tell him save all his money that he's earning at his coffee shop job, and then he spends that. So of course, being a young man, he wants to have more than that. So when you have these equity highs that you slip away from and you have drawdown, it literally feels like you're walking up to a mountain and you're looking up, getting a kink in your neck as you look up at the height, and you tell yourself, I gotta get all the way back up there. When before, when you were building it up, you didn't look at that like that. You were just trying to take one trade at a time. It was just one step at a time, like a rock climber. Where's my next foothold? Where's my next gripping point? That's all you cared about. You're doing the right thing. That's following the model. Now what's happening is when you're in drawdown, you're looking up at that mountain, that peak that you slid down from. And you're thinking, how am I going to get back up there? Well, fuck, how did you get there the first time? Incremental, modular steps. Basic, boring, following the rules, doing this, expecting that, doing this, expecting that, one piece at a time. Think about it. Before you go into drawdown, you're not trying to do crazy shit. You're just trying to do what's the next trade. Do that. Stop. Make your money, be done, turn the charts off, wait for the next session, wait for the next trading day. It's business. But now you're looking at that same business that you now have a loss. You're in drawdown. You're looking at that old equity high, and you're telling yourself, this is going to be so hard to get back up to that. I just want to get to it really, really fast. And you're wrestling with these impulsive feelings that you got to get in there and just do really big trades because you just got to get through it. The quicker I can climb back up there, the better. When that's absolutely the worst mentality to have. You need to tell yourself the same thing you did before. I'm going to find my next setup based on the model. I'm going to risk less money. I'm submitting to the ideal now because I have to do this at a longer duration. I've pushed my finish line further away from me in time because I created this drawdown. The drawdown is it's not an end of a career. It's it's a struggling point you have to wrestle through, yes. But the wonderful thing is once you go through that first drawdown and you mitigate all of that, but you do so correctly. The worst thing you can do is go in there and YOLO, you only live once type trading, to try to get it all back in one fell swoop, it's over. Because what you'll think if you are able to do that by luck is that you're better than you really are. And that drawdown has not had any lasting impression on you to prevent you from being reckless in the future. So you're looking up at that peak, that equity high that you drew down from, losing trade here, losing trade there, and now you're in drawdown. You're not to look at that and say, I got to quickly get back there. No, you don't. Because when you were taking your trades that got you there, you didn't say, I have to be there by this day. Nobody had that mentality, that mindset when you were getting to that equity high. You were just taking one trade, next trade, next trade. That's all you're doing. But now because you're in drawdown, your whole entire perspective about yourself, your abilities, and how it is that you're going to get back up there is completely distorted. That's what makes drawdown become a blown account. Not understanding that mentality that you're now holding is extremely fragile. It's so brittle that the next trade you put on, you're going to be so hypersensitive to every little fluctuation that it's going to make you scared. You're going to be impatient about it. You will not be willing to sit through the stop being hit again. You're going to be more likely to not want to use a stop loss like he did on Friday morning. And then when you don't have a stop and it goes past what your stop would have been, you'll be wrestling with, well, if I get out, it might be just going just past where my stop would have been. And then it reverses. And you start telling yourself that bullshit. You start giving yourself pillow talk on a one night stand. Oh, honey, I really enjoyed the time with you. Let me just stay a little bit longer with you. When really you just want them to fall asleep so you can sneak out. You know you shouldn't be in that trade, but you start doing pillow talk. Yeah, I'll be all right. It's probably going to turn around. And the whole time it's just going deeper into you, running that sword deeper into you. And more damage is being done. And then finally you can't handle it and you get out. And then it moves in your favor. Not because your trade would have came out, but because it's simply just doing something else. But your mind's going to see, oh, see, I did it wrong. And now you're going to go in there and chase it again. That's exactly what goes on in every trader's mind. When they're in drawdown, that's exactly what it is. So the only thing that is actually good about this is it happened on a Friday. So it forces 48 hours of decompression. You have to take time. You have to reset yourself. You got to remind yourself with positive self-talk that nothing has changed. These markets are still going to book the same way they book all the time. They're going to run for liquidity. They're going to go from premium to discount, discount to premium. They're going to run to inefficiencies. Everything's going to operate on time. You just did something incorrect. In this moment, because he's new, he doesn't have but just a couple of days of journals to look at. So he doesn't really have a plethora of experience of leaning back on when it was good. This is why it's essential for you to be demoing, not doing the journaling. That way, when you start practicing with forward testing and you feel like you have encountered a period where maybe they changed the algorithm, they're not changing shit, but you'll feel like everything's broke because you're just doing it wrong. And you'll feel depressed. You'll feel like you're not getting it. You go back to your journal and you read those entries where you saw this coming, the chart looks like this, and you feel better about it. And it gives you the motivation, it cheerleads you through it. He doesn't have that. So it's a lot harder for him right now because he's shamed, wanted to impress dad, wanted to do well, wanted to do something independent all of himself. And then he did that. So $4,000 of what would be considered drawdown is nothing. That's a morning session on a couple contracts for me. And I spent the afternoon on Friday basically explaining to him that, listen, like even though Friday was a bit of a crummy day technically, like it was a lot of give and take, spotty price action. It looked like I was watching the Dow futures when I was looking at ES. And when I was working with my older students, we were watching some of the price action. It was just really weird. And I called out and marked out, with them and my son, several 5-handle runs here and there, back and forth. And I told him, I said, listen, don't be afraid because you did this to be able to go forward. Don't let it bog you down to make you feel like you're going to never be able to do this, because you're going to tell yourself all this weekend that you made a mistake and you want to be able to go back in time and never have done it. It's every trader's regret. When they lose money. I think my dog see the deer outside. We all want to go back in time and not push the button on that trade or start trading on that day when you knew really wasn't anything in there to be trading, but I got time to go and push the button. Maybe I'll get lucky and get some kind of a win. All those things we know after the fact, where hindsight's perfectly 2020, and you can go back and pinpoint what it is you did wrong. He's experiencing that for the first time right now. He's having to come to grips with nobody did it. Nobody did it to him. And he's looking for some way internally how he can take the responsibility and place it on something outside of himself. Just like I did when I was 20, and just like you listening to me. Even the people that say I'm a fraud and my stuff doesn't work, that shit's the truth about you too. You want to find some kind of external reason why you fucked up because it's uncomfortable. And that's what this industry does. It's a perfect mirror. It's better than the mirror when you go to your restroom and you look at yourself in the morning, brushing your teeth, getting yourself ready. That mirror just shows you a reflection of you. This industry shows you who you really are, because you can lie in that mirror. You can comb your hair and put makeup on and shave your face and put contact lenses on. They're a different color. You do all kinds of shit to change that. You can't wear a mask in this industry. All the masks fall off. As soon as you push that button, the real you is exposed. The real person inside of you, the person making the decisions, the one that's driving drunk behind the buys and sells. That's it. That's the person that's responsible. And that sometimes is extremely difficult for an individual to take. It's extremely stressful. It's alarming sometimes when you discover, wow, I don't really have it all together. I thought I had it figured out. I had all these things, planned with all this success. And then when you put the trade on and you wreck yourself and then you try to fix it, not knowing what it is you're doing, and then becoming impulsive, instead of realizing that, okay, I caused this situation, let me take a step back and slow down. That doesn't happen. It's speed up, do more of the same stupid stuff, and get worse. Why do you do that? Cortisol, adrenaline, and not knowing what you're doing. Remember, in your mind, it's the equivalent of you standing in your house with every wall on fire. The room you're in is filling up with smoke. It's an emergency. Outwardly, someone looking at you, they would never feel like that's what's going on inside your head. They happen to walk by, look at you at your trading desk. Yeah, you're in drawdown. Maybe you're not smiling, but they don't feel like you're going through any kind of emergency. But inside, the whole fucking world's coming to an end. And then what are you doing? You're trying to put out all those fires. That's what he experienced. That's what I experienced when every time I blew an account. That's exactly what you experience all the time too. Send me a tweet and tell me hell yeah if that's exactly what you've encountered when you blew your account. And you'll see, you're not the only one. Everybody has gone through this at least a dozen times. Not just once, a dozen times. And until you get to that point where you know your model and you have mastered yourself, 18-year-old kid, especially a male, I mean, he's never going to be in control of himself. Not 18. There's too many chemicals, being pushed through his natural development. I mean, he's at the peak of his testosterone too, so he feels like he can do everything. Like he's superhuman. And that's why it's a little bit harder of a prick to his ego and pride when any failure comes, because he thinks that it should be the same feeling he has when he does anything else and succeeds at. So it's good for him to be humble. It's good for him to learn like he's learning right now. It's also good for dad because
how do I change it over to the right side?
Without me being here. So in a lot of ways, I'm very thankful that he took this initiative to go this route. And I think that's the reason why he wanted to do it, because he knew his own impulses. He had it in his head. He didn't tell me, but I can tell you now, as I'm talking to you about thinking about it, he had that in mind. Once he figured out what he thought he was going to be able to do, as soon as he felt that he could do that, when he was given the car keys without me in the car with him, riding shotgun, he was just going to go drive to town, and he was going to drive until the brakes came off. And thankfully, he ran out of gas. And that threshold that they put you through, or two, and stop you, that's what he hit. So he didn't go off the bridge, but he hit a tree. So now he has damage that he has to get corrected. Still has the car to drive, $49,000 of that funded, but I think it's like 147 something. Okay, but he has to be very careful. And I told him, I said, you got to listen. You don't do anything apart from me being next to you. You don't have to do a reset. Because he was saying worst case scenario, Dad, if I would have blown it out, that's what he was willing to accept. We could just do a reset. I don't care. I'll do that. But I just wanted to get it back right away. Why? Why did you feel like you have to get it back right away? Because I felt like I had to get it back. It just felt like I had to. You were telling yourself that. Nothing has to happen. Nothing. Nothing has to happen. You have to be comfortable between trades. You cannot have any kind of overwhelming impulsiveness to get in there to make something back or make something more. If you're doing that, that's the improper mindset. You are gambling. I promise you, if you're listening to me right now, if you are unstable and highly emotional, impatiently waiting to get into a trade, the best advice I can tell you is go do something else for 30 minutes. Come back. If you miss the move, who cares? That's not the last trade it's going to form. But if you lose your shit about having missed that move, you are a gambler. You are absolutely an uncontrolled gambler. You feel like you got to be in every move. I'm not teaching you to do that. And yesterday afternoon, I basically sat down.
I don't know. I kind of like it.
Privy to what I was doing. I was showing him buying and selling, up and down, up and down, up and down, up and down. And I said, listen, just because I can do this, just because I can do that, doesn't mean I sit in front of these charts and do that all day long. I want to pick my shots. I want to be able to do what makes sense to me. And the trade I know is likely to occur, and I'm not in a rush to get into, and everything lines up, and I have all the signatures I'm looking for. They're the ones I tweet to you. They're the ones that I'm going in and telling you, okay, I'm going long here. I'm taking a short. And they don't pick off. Their mother's one. I did lose one. And I see people tweeting all the time. You did that on purpose. You told them, no, I got it wrong that day. I'm not infallible. I did it wrong. But most times I'm not doing it wrong and calling it before it happens, and there it is. But I showed him. I said, listen, just because I can do that doesn't mean I go in there and go hog wild with it. It's not necessary. You need to master yourself. Just because you have the sword in your hand and you can swing it all around doesn't mean that that's what you should be doing. You should keep it in its scabbard. Unsheathe it. Do one stroke. The idea. It's the art of drawing a sword. You pull that blade out. As you're drawing it, it's also a cut. You remove blood and then put it back in the scabbard. The cut and the drawing of the sword is all one motion. You're not out there like Jason Voorhees and Friday the 13th fucking swinging around with a machete trying to cut everything. And that's exactly what you become, a crazed, homicidal fucking psychopath when you're in drawdown. You literally have a machete in your hand, and you think every candlestick's a fucking tree that you gotta chop down. This is the one I'm gonna do next. Oh yeah, you printed that? You got. And the whole time, you're hacking yourself up. You're not cutting anything down except for your equity base. And you don't even realize it because you're a crazed, homicidal maniac because you did it to yourself. And you're looking at it like somebody else did it to you or something else did it to you. And you did it. You have lost the plot. You've lost control of yourself. And the only thing that fixes that, time. You have to separate yourself, move away from the stimuli that's causing you to want to do those things. Ground yourself, let the adrenaline and the cortisol burn off. It'll take about a good 30 minutes. Cortisol lasts a little bit longer than adrenaline. Adrenaline, several minutes and it's gone. Cortisol takes a little bit more time to burn that off. And then once you are in a proper state of mind, then you can deal with other things in your personal life and not be so snappy and punchy. ready to fight and have an argument. You won't feel like every little word that's been spoken to you has needles on it, pricking you. You won't argue with your spouse. You won't yell at your kids. You won't kick your dog. You won't get fired at your job. But when you're looking at that drawdown and you're staring up at it like it's a mountain that you're never going to be able to climb back up, and you have to hurry up and get back up there, like that's the thing that has to happen. Stop and listen to me for a second, okay? Nothing has changed. Everything is exactly the way it is right now, and how it was exactly the same way when you were at the equity high. The system, the concepts, the methodology, and the way these markets look have not changed. The only thing that has changed is your perception about yourself, your own ability, and what you're going to do next. So you have a sense of heightened concern. You had a house fire. You want to hurry up and get your house restored. Does it happen like that in real life? No. You lose some things that you can't get back. That sense of, I'm doing everything right, this feels great, this is a lot easier than I thought it was while you were making that equity high. Now you have lost. You didn't need to second guess yourself in the beginning, but now you have to second guess yourself. Am I going to do that to myself again? What am I going to do? If this trade turns against me, how am I going to feel? See, now you have that in your mind now. And you're feeling it when you don't have trade, which causes a great deal of anxiety, performance anxiety. And it's easy to talk yourself out of ever staying with this when that happens. And a lot of people quit. A lot of people quit, but still push the button because they can't take themselves away from it because they're in a state of mind, they're impulsive, they're reckless, and they just aren't willing to lessen themselves.
Man, just changing my chart colors for an hour.
But they just want to push the button. Much like I mentioned before, that's Twitter space. I think I talked about it one time on a YouTube video lecture somewhere. On my first year honeymoon, I told you I took $100. That's all I had to take and put into a, what do you call it, like the slot machines. I could have brought more, but all I wanted to bring was $100 because I knew the chance of me making money off of that was next to none. So I limited myself to $100. And I tried eventually, after being there for hours, trying to lose the $100. Like I was down, just wanted to be done with it, but I didn't want to walk away because this is stupid. Like I just want to lose it and be done. That's exactly what happens when you trade with the state of mind that my son has right now. You want to be able to say that you got pushed out of it by some external force. Yeah, stupid brokers. Yeah, stupid market makers. They did it to me again. They got my stop. But then it makes it a lot easier to deal with. You didn't mess up. It was somebody else that did it to you. You didn't do anything wrong. You did everything wrong. You did everything wrong, and you have no sense of responsibility. And unfortunately, in this industry, responsibility is always yours.
Low-key, I'm gonna end stream.
It's not mine. It's mentor.
Just a little stream today. Just a little stream. And I feel like that's cool. It's Saturday. Gonna enjoy the rest of my day. I'm probably gonna head back to the charts, but for now, I'm low-key. I still have that much time to stream today. I want to do like an actual like backtesting stream. I feel like mainly I've been just watching videos, lectures, the 2023, which isn't necessarily like a bad thing, but I definitely need to be doing a backtest video.
I'm showing you every day what it's going to do. Everybody that has a weak mind, they're going to manifest that outwardly in this industry when they suck ass. You can see who the weak people are. People that chat too much. These things don't work. These things aren't profitable. These people are broke. They're in that state of mind that my son's feeling right now, and they never got out of it. They never got out of it. They're the guy that never got picked to be on the team. They're the last one picked. They got a chip on their shoulder. My son has a chip on his shoulder right now, and I'm eager to see how he contends with that because he's extremely competitive, very competitive. He has told me to my face, and I love it. He goes, Dad, I'm going to be better than you. And damn it, I fucking want to see it. I want to see it. I want to do everything I can to make that fucking happen.
I don't think it.
I want that. I want to see it. I hope I live long enough to see him smoke my ass and be able to do it way better than